technology for traders and investors on the retail side, but also on the institutional side, is increasingly important and a way to automate and simplify and leverage the process and give us our time backs. Hey, everybody, Serge Berger here from the Steady Wealth Podcast. I have my good friend and colleague, John Brunel, aka JB, with me. We'll get to him in just a second, but this is your Steady Wealth Podcast. I don't even know what the episode number is, but I've been doing this for a while now. If you are listening to this and you haven't yet subscribed to the email that goes out to remind you that when the podcast is ready, you can go to steadywealthpodcast.com and do that there. Quick side note, I still have a cough, so if I can't bring the energy or I'm coughing here and there, I apologize. It's, I guess, that time of year. JB, first of all, welcome, and thank you for taking some time here. We are recording this on Saturday. I've been very clear about this. We had a market last week, yesterday specifically, Friday, I believe it was the 8th of March. And we want to talk a little bit about what happened to semiconductor stocks and maybe some things we're seeing. And then we'll go right into technology and some of the tools that we like to use and some ways that we think people can dramatically improve their process with trading and investing. But give me your take, and I'll start sharing a screen here quickly. Again, if you're watching this on one of the traditional podcast platforms, you're not going to see the screen, but you won't miss a thing. We're going to talk about everything exactly we show on the screen here, so you should be all good. JB, enough from me. What do you think about the price action in NVIDIA semiconductors on Friday?
Yes, first of all, thank you, Serge, and it's great to be here. Hello, everybody. And as we all know from being very active in the markets, AI, NVIDIA in particular, and the semiconductors have been leading. But what we noticed on Friday going into the close from a technical perspective is what I call like a bearish engulfing candle, which is really from a short-term perspective, a bearish move, or at least from a momentum standpoint, something to take note. That was very obvious considering the overall market has been largely dependent on the AI group.
Yeah, let's expand on this a little bit. Let me just quickly mention that this is something that both you and I mentioned and highlighted in real time to our clients. I also did tweet this and put it on our YouTube channel. Make sure you go to that YouTube channel, type in the Steady Trader. You'll get to that. But I'm showing a chart here. And again, if you can't see this, don't worry, we're going to describe it. But the technicalities of an outside day is basically a failed rally in a very big way on Friday.
Yeah, absolutely. And again, looking at a shorter term perspective, obviously these have been in significant uptrends, but from an upward momentum standpoint, it's something to take note of in terms of maybe adding longs right here, for sure. Depending on what your short-term strategy is and for trading, I would look to see Monday how this opens, and if it continues to go down, then that momentum would indicate that it's waning a little bit more.
Yeah, so maybe just a little bit very specific to this. What happened on Friday, we had some economic data. We had unemployment data out of the United States, of course. A pretty good report, although unemployment is ticking up. That didn't seem to make the headlines, but that's neither here nor there. We're in a momentum market until we're not. I think you and I talk about that almost every day together. Yep. But what happened on Friday is essentially NVIDIA and most things essentially opened higher. They gapped higher for the umpteenth day, seemingly. In fact, NVIDIA at some point in the day was up as much as 5.25% or so, closed the day down, I should say, about 5.6%. So when we talk about outside reversal days, and this is just one way of looking at markets, right? It's not the only thing, but it's important to be aware of this. It basically means that the bulls tried one more time, very hard, to gap this market higher, suck in more buyers, and then found out pretty quickly that there were no buyers or no more buyers. Also, interestingly, JB, NVIDIA came within, lo and behold, about 27 points of the 1,000 mark. So one of the things that we discussed to our clients in the chat rooms, and I also called some clients on this, was the fact that, we're saying that one of two things is going to happen. Either NVIDIA is going to break above 1,000 and take out any stops that might still be there, or NVIDIA is not going to get quite to 1,000 because the big institutions are going to front run that because it's such an obvious area, and they'll start
Mhm.
selling. And the latter ended up happening. The SMH, which is the semiconductor complex more broadly, that was down 3.9, call that closer to 4%. Individual names, I'm bringing up our market rover. We'll touch on that a bit more later, JB, but I look at our semiconductor list that we created so people can track this. The worst performer on the day was AVGO, it's Broadcom, down 7%. And I think you can do a victory lap here because you mentioned this on, believe, Wednesday. Was it in a members webinar that we did? Or somewhere,
Yes.
I can't remember, it's just you and I, that watch
Yeah.
for the Broadcom earnings. That could be the straw that breaks the camel's back in the semiconductor space, even for just a little short period of time.
Correct. And those were earnings were happening after market. And then I believe earnings were positive, but that might have been sell on the news, and we started to see a sell off there. It's also interesting if you look at some of the other technology heavy, right? The Qs, which haven't been able to make all-time highs since we first started in March. You can look at XLK and technology. They're bumping up their highs.
And
And
we've
there
been
you have,
losing a lot of these stocks, right? You and I have been
yeah,
talking about Microsoft that has basically been making a series of lower highs, not lower lows though yet. Let's be fair as well. Google has been on there. Of course, we know Apple, ironically enough, on Friday, believe it or not, was actually up 1%. So there's that potential sector rotation, or maybe people flip their Apple shorts into NVIDIA shorts. Who knows, right? A lot of things can happen. But just maybe as a last point on this, and then I want to talk about technology and how
Mhm.
traders and investors and us ourselves are using technology and could use technology to their advantage more, to make things a bit more streamlined and save time. What's your thinking here if you look at the broader market? We've talked about the S&P indirectly, outside day there as well, by the way. One thing that I get a lot of people still talking about is the Russell 2000 and how that might be the next one to go. But technically speaking, the Russell 2002 is actually still in a trading range, an extended trading range. And it, to me, needs a bit more time to establish itself if it wants to really
Right.
break out.
And for me, looking at the IWN 200 was my number, and it was vacillating there for a while, be up and below and above that. But as you pointed out, just keeping an eye on that in terms of maybe other sector rotation, biotechs being a big part of the Russell 2K, maybe some regional banks and so forth, but definitely keeping an eye on that.
Yep. Last but not least, let's talk about gold and the Bitcoin. I'll look at gold through the GLD. I know you and I have been quite bullish on this. I'm not going to flash or discuss our price target, but I think the breakout here is notable on gold. Let me show you the gold futures, or at least talk about them here quickly, just so people can see the broader idea. What do they say? The more you reach into the upper resistance area, the more powerful the breakout. Gold's been now bumping into that up until it finally broke out now, that just north of 2000 area multiple times since the year 2020. It's finally breaking above, as I'm showing here, where we can explain. We had a basically the last 2 weeks, let's put it this way, gold moved 7%. That's a hell of a move for gold. If just to put that in context, this is not NVIDIA. This is something a bit more global in that sense. Any thoughts on that? Do you think this is for real?
Yeah, definitely. If you look at, I think it was March 4th, it made a strong move up above that resistance level. Right now it's around, I believe, 200. Again, another round number that I'm watching. Does it hold that number and then maybe continue higher? But from a technical perspective, the chart looks good.
Yeah. I should say, I think you talk about the GLD. I'm just right now. I was just flashing the gold futures, but anyway,
Oh,
that
sorry.
close.
Yeah,
Not a problem. I just one. And then
gold.
last but not
Yes.
least, no conversation these days, whether it's water cooler at the gym, at the gas station, picking fruit at the store, or anywhere else, would be complete without someone mentioning or talking or asking us, Bitcoin, what are you thinking?
I'm thinking it's looking pretty strong here. Maybe some consolidation. I think 6,900, that round number from November of 21. It's right around that area. Again, you have another nice round number in 70,000. I think just for me personally, if it starts
Mm.
moving above, that's definitely bullish. We have the phenomenon having in the crypto market coming up around April. Certainly, if risk on continues, this is one that should benefit.
Would agree. And the one thing where we started off with that bearish reversal in Nvidia on Friday before, as we started this conversation together today, one thing I haven't shown everyone is the correlation between Bitcoin and Nvidia year to date. That's basically one. So if Bitcoin were to continue to grind higher from here, or maybe explode higher, and Nvidia is stalling, it would have to be breaking that strong correlation, which to me would mean maybe something else is underfoot. So something to keep in mind, right? Because those
Mhm.
correlations, they're good until they break. And when they break, they can break violently. So just maybe a few things to keep in mind.
Yeah.
Very good. We are actually going to talk next week. JB and I are holding a special session that's open to the public about how to use technology in trading and investing. And so what we'd like to do today is spend a bit of time to talk a little bit about what types of things are out there to use for trading and investing, what kind of tools. It really runs the gamut, right? We can talk about tools that go from, for maybe the more trader oriented person, charting, of course, like we just talked about before and showed, our market rover, which I'd like to touch on a bit more before, which is a marvelous tool for tracking one's portfolios, creating portfolios, tracking trends, being alerted when there's new trades and new trends in anything, including our own watch lists and stuff. But I think more broadly speaking, obviously trading and investing is not just about charts, and there's a lot of other stuff. One of the go-to things that I thought we would just mention to people, and I know this might be a little bit elementary, but just use your excuse me, just use your phone. There are so many apps nowadays. And I should also preface this by saying that I do not believe you can be a successful trader and investor using your phone. Anyone that's now under the age of 40 or 50 is probably about just clicking out of the podcast right now because that's all you want to do. And I think that's okay if you basically someone else is managing money. But if you are a trader and investor that wants to be serious about it and manage it yourself, you got to have a computer, man. And you have to have multiple screens. A phone is great. I'm on this thing all day. So many different apps, Yahoo Finance, Google Finance, whatever. What are you thinking there? Maybe give us like one or two apps that you think are amazing. And we should say, no, we're not being endorsed by any of this right now. So anyone that ever listening, you're welcome for the free endorsement.
Yeah, there are so many apps out there. When I'm mobile or I'm out or I'm away, Apple, the stocks, little app on that, I tend to look at or peruse that. But more importantly, what I want to know is when I do my research, trends and alerts that go off that will remind me, hey, something is happening in this particular stock that I've identified at a certain level. And there are a number of things out there, but you had mentioned the market rover and the screening tool. But the ability for me to research and analyze trends and then trades. And then once that happens, it triggers, I get an email or something on my phone. If I'm away, I can look at that, or it reminds me to go back and revisit it. I know we'll go over that a little bit in our webinar, but when you think of trading these days, particularly at the institutional level, when 60, 70% of that is algo driven, we have a tool now, at least for the retail trader, that I like to think that at least competes, and it is algorithm based. And I like to do my own technical analysis and look at the market rover, and then are those lining up? And if it lines up, then hey, that gives me more confidence. But the ability for the market rover doing that by itself, and it's very easy to use, and you can scan it each morning or set up alerts, and really I find that it finds a lot of the things that I find doing my own technical analysis on an absolute basis.
So saving time and giving
Saving
perspective.
time, setting up alerts, important areas. Apple
Yeah.
that we mentioned, that 180 level that broke,
Yeah.
that fired off, and I was on that. And just kind of using that as my right hand man or person to
Sure.
validate things against. But it's all automated. It's algorithms, and I find it to be very helpful. And it's a big part of my daily routine.
And you mentioned before, JB,
Mhm.
about being mobile, right? So
Yep.
I know for myself, when I get up in the morning, depending on where in the world I am, typically first thing I do is go to the gym somewhere. And if that involves being either in the car or in public transportation or on the bike, I typically will listen to something. Again, on my phone, in the car, it'll be plugged in. If I'm on the bike, it'll be through ear things. And I would listen to maybe some podcasts that maybe like this one, right? Just to be, because if you think about this, like we all lead busy lives for the most part. And whether you're listening right now and you're maybe retired, part-time retired, maybe you're 25, 30 years old and you're working full-time or part-time, anything you can do to keep you from having to spend a lot of time in front of your computer doing research is helpful. I hate to admit this, but most of the time, even at the gym, when I stretch, I stop doing it while I'm actually working out because I notice that I can't bring the energy. But when I stretch or even on like spinning bikes or whatever, like I will listen to analysis, some sort of market research or something, Twitter feeds or X feeds. If you can build a good list, of course, you should hashtag at steady trader in your Twitter feed to follow us. But that can save so much time. I mean, I bet you just doing that research while I'm going to the gym and going back to the office from the gym and while I'm stretching, it saves me a good hour of work that I otherwise have to do in the office. Portfolio tracking stuff. Maybe some of you have an account that Schwab or one of the robo advisors elsewhere. Make sure you get the app. And I know this sounds a bit duh, and everyone probably has these apps, but use them. They offer some tremendous information. Again, it can save you a lot of time, and I think that's important. They give you an idea of where you are holistically. I don't believe in checking in my net worth every single morning. The trading account's a different story, but once a week, know where you are. Maybe it's a Saturday. Check in, and even a lot of these apps now, I don't want to mention any single one because there's a lot of them. Even your bank might do it, allow you to attach other accounts from other banks even to API in the numbers, your total overall net worth and stuff like that. And things like that to me are crucially important to lever and improve our process and know where we are at a given point.
Yeah, I agree 100%. And as you mentioned, there's a lot of information right out there, and there are a lot of people, um, for whatever reason, maybe they're touting a certain stock or there's other interests out there, but really having some of the tools that we have. And even if that's somebody that gives you a hot stock tip, right, at a wedding or something, you can very easily click on a button, see if that stock is in a green trend, which is obviously positive. Is it in a black trend or is it going down? And if it's going down and somebody's telling me to get in, that at least for me, and not only from a personal perspective, but some of my family and other members, I could real quickly look at their portfolios and say, hey, why are you in this? This is trending down, or there's a sell signal. And just to keep, you know, if other people are managing your money, just keep them honest, right? For the least part. So I find that very helpful.
There's so much, and let's talk about this a little bit because this is going to be our focus this week in the discussion / webinar that you and I are going to host. And if you haven't already signed up for it, you should be able to do that. And whether you're listening, clicked on this from an email or who knows where else, you should be able to do it on either the next screen or somewhere in this email or at the bottom here somewhere. Let's talk about this. So the market rover is essentially something that I developed about 7 years ago or something like that. The concept of it is about 15, 18 years old at this point. And it really just divides trends and trades. So it became very apparent to me after a few years at JP Morgan that a lot of even institutional investors, and I was largely dealing with institutionals, were doing quote unquote trades that really were had no relation to the trend. And I'm not talking about day trades. It would be like multi-day, week kind of things. And so it dawned on me that I need to figure out what the heck is the trend. And the trend is a multi-month, multi-quarter, multi-year thing, right? So what the market rover does is, and for those of you guys that can see the screen, I'm just bringing up Broadcom just because JB, you nailed that one last week and kind of mentioned that's something that could reverse things on Friday. So what the market rover does is it saves me, JB, and I try to be quantitative on this. It's hard to really nail it down. I have no doubt this saves me at least 10 hours a week, at least, maybe 20. Because like even let's say you're not that serious about the markets, and as you say, you hear of a great stock on a Saturday at the cocktail party from your cousin's neighbor, and you go back to work or back to your computer the next day, you type in that stock, that ETF, that futures contract, that cryptocurrency, and see, does it make sense? Is it in a uptrend? Is it in a bearish trend, or is it just outright choppy and there's nothing to do? And I can't tell you how time saving that is, because one of the things that I find a lot of people do, they try to force themselves. They build a narrative around what someone told them, even if there is no narrative like that, really, according to, let's say, the charts. And something might break out, like gold. We talked about gold before. Gold had opportunities to break out since 2020. Has it done it? Finally, last week, 4 years later. It's something that can save a lot of time. And then to your point, now this is completely browser based, our market rover. So it's something that we suggest one uses in a browser, either on a laptop or PC or Mac, or if you really have to, it obviously works on your smartphone. We just want to make sure you have enough desktop space for it. The other thing, and you mentioned this before, JB, maybe you can highlight this about alerts and watch lists. I'm a big believer in creating watch lists and setting alerts. One of the great things about this is we can create our own watch lists. So, like, for example, one watch list that we actually created for clients for everyone to see is a sector ETF list. So immediately we can see which sectors of the S&P 500 are bullish in a green trend, or bearish in a downtrend, or neutral trend. So automatically, like right now as we're recording this, most trends are bullish. Does that mean stocks can't go down for a week or two or three or a month or two? Of course not. But the broader trend is higher and it's increasingly. Howard, maybe you can highlight just a little bit more about how you use this kind of a thing with alerts on the market rover, because we can talk about it a lot more this week than in the member session or in the session.
Yeah, again, keeping it simple, I like to start here and see how are the different sectors doing from a top-down approach, and maybe where some money is rotating. Is money rotating into energy, or is it maybe rotating in utilities? And so once I see it's in a trend, or that trend is changing, and maybe there's a T signal or a buy signal within that specific sector, then I'll look at that sector. I'll look at the top 10 holdings within that sector. What are the stocks? I'll analyze it. And for me personally, if it makes sense, I'll go to the market rover and is everything aligning? And then I will put on a trade accordingly. But it's very easy to do. I start with the sectors. Like you said, you could put in your watch list. You could do specific, whether that's semiconductors, you could put financials, you could put whatever it is, and very easily every morning check that and then start drilling down.
Yeah, and
Um,
you get very granular, as you said, and then
I do,
yeah,
yeah.
I know you do, and that's the beautiful thing about this, right? You can if you want to, you don't have to, but it also sends out trade alerts, right? So, for example,
Yeah.
let's say I had AVGO on my watch list, which a lot of people do. You can create a watch list with every single stock and ETF on there, and then get every single signal. So, for example, AVGO became a buy from a trading perspective, right? It's been a trend, bullish trend forever, so very profitable. It became a buy at this point on February 22nd. It then rallied to reach its profit targets a few days after. And then, of course, importantly, we don't want to hold trades, not investments,
Mhm.
trades through earnings. So another one well done there for JB. You can look at the previous signal. And it actually gives you profit targets, two of them, target 1 and 2, and a trailing stop. And we actually send out trade alerts for our favorite ones in the morning, with where we give people an options idea as well on the underlying. Again, it's just a great time saver. And not only that, but also gives you such great perspective. It's simple, repeatable to use, and it's just another technology tool that we think can really improve the process of repeatability. Because I know you're a big technical guy and you look at macro as well, which is so important. But at the end of the
Yeah.
day, price is really the ultimate arbiter and doesn't really lie for the most part until, of course, you get to an earnings report. And again, there you don't want to be in trading positions anyway. Any last thoughts on that?
No, again, I use it every single day, and looking at the trend in the specific trades, I tend to get a little more granular, but it's very easy. And like I said before, a lot of what I do matches up with the market rover, which is the ideal world. And you don't have to really get into all the technical analysis stuff. This does a nice job
Yeah.
um, mirroring that. So And
Well,
then
and doing
again,
the
setting,
technical analysis is still very, I think, is very important. It's very
yeah,
complementary. I think what
yeah,
this does is it can either confirm
yeah,
what you're seeing on the charts or what you're seeing, including fundamentals and
yeah,
macro and structural, but also it can really save you time. For AVGO, there's no reason to put on a short. Like it's just
right,
clearly going to the moon. Now, at some point, it'll change, and the market will tell us it's then going to be either be in a red background color, meaning a bearish trend, and then it's just going to start giving us trading sell signals, right? It's just not there right now. So, like, why would I even try in a big, meaningful way for more than just a little tiny trade to be extremely bearish?
and obviously knowing your time horizons and why are you in this investment or this trade. And oftentimes what you'll see on the market rover, like you mentioned, it'll be in a green trend and then it might go into
Trend.
black there. When trends start to change, you're going to see a little bit of choppiness. So that's another heads up from just easily looking at the market rover.
Yeah, and it can keep you away, right? So all this stuff, and it, again, market rover is just one example. We gave you a ton of examples before here earlier in this podcast as well. Just use technology, I think, is the bottom line. And technology, again, it's I just literally just had a dinner pizza with a guy that has a semiconductor company. He does microchips for cars. And it's just we were just talking about just how unbelievable it is that we can do anything and everything from our phones even. Again, I think, and you would second this, that being a full-time trader and investor with just an iPhone is a bit silly. But hey, there's a lot of work that you can do. Again, whether it's on a commute or even on a jog, listening to a podcast and audibles, and there's a lot of stuff you can listen to. Again, it's just use it to your advantage, and you can save a lot of time and hopefully be more informed and more balanced in the approach and have a better overview. That's it, folks. Again, if you're listening to this here before the, I guess, what is that, about the 17th or so of March, make sure you sign up if you've not already for the discussion that JB and I are going to have in much more detail of how specifically how to use our market rover technology. Again, this is something you can use on a phone or an iPad, preferably on a laptop or computer, just because, again, you do want to be serious about it. But we're going to show you exactly how we do that, how it works, how it can send out alerts, and how it really is like a portfolio solution, whether one is part-time, full-time, or whatever. We'll look forward to that. JB, thank you so much. Thank you again for taking time on a Saturday. It wasn't my choice either. I think it's important that people understand technology is important.
Yeah, love it. And thank you for having me, Serge.
Thanks, JB, and we'll see you guys next week. Thanks for listening.